Welcome to TalkTickers. Today we're diving into the Q1 2025 earnings call for Agnico Eagle Mines Limited.
Yeah, quite a call.
It really was. Looked like a pretty strong quarter overall. Record financials driven by those high gold prices, solid operations too.
Absolutely. They had some big milestones, and they sound pretty confident about the rest of the year as well, strengthening the business all around.
And making real progress on those future growth plans.
Oh, definitely.
Lots to unpack there.
Okay, so let's start with a snapshot. Production numbers first.
Sure. Gold production came in at 874,000 ounces.
Which is almost exactly the same as Q1 last year, right?
Pretty much spot on, yeah. And costs were similar too. Cash costs were $903 an ounce.
Again, very close to last year and actually below their guidance.
That's right. Which feeds into those record financial results you mentioned.
Yeah, talk about those. Record revenue.
Record revenue, $2.5 billion. Adjusted earnings, also a record, $770 million, or $1.53 a share.
Wow. And EBITDA. Record adjusted EBITDA too, $1.6 billion. Just really firing on all cylinders financially.
And they're returning cash too. Was it $250 million back to owners?
Yep, through dividends and buybacks. And maybe the biggest news on the financial side, net debt.
Yes, they almost wiped it out.
Practically gone. Near zero by the end of the quarter. That's down from $1.5 billion at the start of 2024. Huge improvement.
Incredible. And free cash flow.
$594 million generated. That's even after some pretty significant working capital outflows.
So potential for even higher free cash flow later in the year, assuming gold prices hold up.
That's the expectation, yeah. And Moody's noticed too. They revised the outlook from stable to positive.
Okay, very positive picture. Let's dig a bit deeper. You mentioned costs were below guidance. Why was that?
Well, a couple of main things. Higher gold grades at several mines helped a lot. More gold per ton of rock, basically.
Brings the per ounce cost down.
Yeah, exactly. And they also got a bit of a boost from the weaker Canadian dollar. They budgeted, I think, 1.38, but the average was more like 1.44, and they realized 1.42.
So currency helped their Canadian operations costs in U.S. dollar terms?
Correct. But it wasn't all tailwinds. Those higher gold prices mean higher royalty costs.
Ah, right. How much does that impact things?
It's roughly an extra $5 per ounce in royalties for every $100 increase in the gold price. So it does offset some of the gains.
But despite that, they kept their full year cost guidance the same.
They did. Cash costs still guided at $915 to $965 an ounce. And all-in sustaining costs, or AISC, at $1,250 to $1,300.
Although they did mention AISC might be higher in the next few quarters.
Yeah, mostly due to the timing of capital spending. Some bigger investments planned for later in the year.
Okay. Let's switch gears to capital allocation. You mentioned the $250 million return to shareholders. How does that fit their strategy?
It fits perfectly. They returned about 43% of free cash flow last year. This quarter, it's around 42%. They're very clear. Strengthen the balance sheet, maintain flexibility.
Which getting near zero net debt certainly does.
Absolutely. And deliver strong shareholder returns. Dividends, obviously, but also ramping up the buybacks.
They mentioned increasing the buyback limit.
Yeah, they intend to ask for approval to increase it to potentially $1 billion over 12 months. So quite aggressive there.
But they're still investing in growth. It's not just about returning cash now.
No, they're clear on that too. Reinvesting in those high return internal projects, funding exploration. It's about disciplined capital allocation, balancing today's returns with building future value.
Right. So let's talk about that future value, the big growth projects. Detour first, aiming for 1 million ounces a year.
Over 1 million ounces, yeah. Huge potential there. They finished the overburden excavation, got the water permit.
That's a big step, the water permit.
Crucial. And they're starting the ramp development in Q2. So really moving forward.
Okay. And Malartic, also targeting 1 million ounces, but it sounds more complex.
It is. It's kind of a multi-pronged approach. You've got the ODC Phase 1 underground mine.
That's the Odyssey project.
Right, Odyssey, targeting around 550,000 ounces a year. That's progressing well. Ramps on target. Shaft sinking is on track. First shaft completion expected mid-2027.
But they're already thinking about a second shaft there.
They are. Exploration's been promising. A second shaft could add maybe another 220,000 ounces a year, probably starting in the early 2030s.
What needs to happen for that?
They need to firm up the resources. Target is delineating about 2 million ounces in inferred resources. They'll make an internal concept decision by the end of this year, 2025.
And there's more feeding into Malartic, too. Marbon.
Yeah, Marbon. That's the pit they got from O3 Mining, about 13 kilometers away. Potential for maybe 100,000 to 130,000 ounces a year. They're drilling that now.
First resource update end of this year.
That's the plan. Maybe another update end of 2026. And then there's Wesamac too.
Right, that's further out, 100 kilometers.
Yeah, underground potential there, maybe another 100,000 ounces a year for the Malartic Mill.
So the grand plan is greenlight the second shaft, Marbon, Wesamac, all around early 2027.
Seems to be the target, yeah. Integrating all that new ore, feed into the Malartic Mill through to the 2030s. It's a long-term vision.
Okay. Then there's Upper Beaver, new mine.
New mine, potential for over 200,000 ounces a year. Construction's looking good there too. Surface setup, headframe steel, hoist room, commissioning for that expected early Q4 this year.
And then shaft sinking starts.
Yep. Plus, the exploration ramp box cut is done, so ramp development should start Q4, maybe even sooner.
And Hope Bay, that's even longer term.
Definitely longer term. Targeting over 400,000 ounces a year, but likely in the 2030s. They keep talking about applying the Milligan formula.
Right, using lessons learned from that successful mine development.
Exactly. Detail engineering is moving along, aiming for 50% complete by Q1 2026. Site prep is happening now. Camp upgrades, airstrip, mill dismantling.
So an update first half of 26, potential green light soon after?
Looks like early 2026 is the target for a potential go-ahead decision.
And quickly, San Nicolas, the copper project in Mexico.
High grade, high return, they say. Feasibility studies ongoing. Project approval probably towards the end of 2025. Depends on permits and the study results.
Okay. So lots of product development. What about pure exploration, finding the next big deposit?
Still a huge focus. They drilled 300 kilometers in Q1 alone across all the sites.
Wow. Any highlights?
Yeah, some interesting stuff. At the OB joint venture, good results near surface in Patch 7, and also in the gap between Saluk and Patch. Could boost resources there.
And at Odyssey, supporting that second shaft idea?
Exactly. Exciting results in East Goldie, both Upper East and Lower Eastern Extension, and also in a parallel zone called Eclipse. Really enhances the potential for that second shaft.
What about Detour?
Drilling below the pit in the saddle area and west near where that exploration ramp is going. Some pretty spectacular local results there too, like 8 grams per ton over 78 meters.
Very nice. Let's touch on sustainability. Always important.
Agreed. They put out their 16th annual report. Key focuses are, safety aiming for 0 accidents, though 2024 wasn't quite as good as their record 2023.
But they're focused on improving.
That's what they said, yeah. Also, climate change, their GHG intensity is apparently well below average. Reconciliation with indigenous communities and employee development.
Any notes on employees?
Yeah. Engagement improved, and turnover is apparently very low at Detour and Macassa, lowest ever, they said.
Good signs. Okay, tariffs. Big topic elsewhere. Any impact expected for Agnico Eagle?
They don't seem too concerned. No impact on revenue expected. On the cost side, maybe 60% is labor and energy, so not really affected.
What about the other 40%? Consumables, supplies.
They think the impact will be less than maybe feared, partly due to local supply chains. Their initial guess is maybe a 3-4% cost increase overall.
Which could potentially be offset by a weaker Canadian dollar anyway.
Potentially, yeah. Plus, labor deals for 2025 are done,
Yeah.
And they don't expect tariffs on equipment purchases. So overall, seems manageable for them.
What about their investment portfolio? They invest in junior miners, right?
Yeah, the strategy is to invest early in promising projects in their operating regions. Get knowledge. Be the partner of choice later on.
Has the portfolio size changed much?
It's increased, but mostly because the value of the assets went up with gold prices. Not really big change in their investment pace. They review positions regularly.
Okay. And the Canadian Malartic royalty. Any thoughts on buying that back?
They said they look at it continuously, weighing it against capital discipline, whether it makes sense for shareholders.
They did mention the ore body is expanding beyond the royalty area.
Right. Which gives them, an informational edge if they do decide to negotiate buyback. It's an ongoing evaluation.
And quickly, base metals. Beyond San Nicolas, are they looking at more copper or zinc?
They said they're primarily a gold company, but they're open to it if the returns are strong and it's in a jurisdiction they like. It's opportunity driven, not about hitting some diversification target.
Got it. Okay, that brings us to our This Is Not Financial Advice segment.
Always the fun part.
So, summing up, near zero net debt, strong free cash flow projections, planning more aggressive buybacks, hinting at dividend increases later.
Yeah, once they maybe hit $1 billion in net cash and gold prices find some stability, lots of positive signals.
So what's our outrageous but plausible trade idea for today?
Okay, trade idea 1. Consider going long Agnico Eagle Mines. Maybe look for an entry point on a short-term dip in gold or just general market wobbles.
The rationale being?
The rationale is that combination of strong operations, the growth pipeline we just discussed, Detour, Malartic, and that very clear commitment to shareholder returns. The big buyback program, especially if a dividend hike follows, could really support the stock price.
Any way to hedge the gold price risk?
You could potentially hedge some of that near-term gold risk with short-dated futures or options, if that fits your strategy.
Okay, interesting idea. Anything else?
Well, outrageous but plausible trade idea too. A pairs trade. Go long Agnico Eagle and short a, let's say, higher cost gold producer, maybe one with a weaker balance sheet and less organic growth.
Trying to capture the relative value.
Exactly. The thinking is Agnico Eagle's better cost structure, their growth prospects, the shareholder returns, focus that should help it outperform less robust peers, especially if gold prices stay strong or rise. You're betting on the quality difference.
All right, two interesting, if speculative, ideas there.
Definitely speculative. Outrageous, but plausible, remember.
So wrapping up our deep dive on Agnico Eagle's Q1 2025 call, key takeaways. Record financials, much stronger balance sheet, active shareholder returns, and real momentum on those big growth projects.
Yeah, they sound optimistic, and you can see why based on the quarter and the plans laid out.
We hope this has given you a clear picture of what went down. What really stands out to you after hearing all this? What parts make you want to dig deeper?
As always, do your own homework.
Absolutely. Thanks for tuning in to TalkTickers. Join us next time for another deep dive.
And remember, this is purely informational, not financial advice.